Qualcomm Stock, ticker symbol QCOM. Earlier this month, Qualcomm did present their quarterly report where they beat on EPS and revenue. For the upcoming earnings, analysts are really optimistic. And year to date, the stock is up almost 14%, which is very interesting. People love Qualcomm stock because of multiple reasons, and one of them being the dividend. And I understand why, with dividend yields sitting at 2.76% and 19 years of dividend growth. So could this be the perfect moment to buy Qualcomm stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Qualcomm do? Qualcomm develops and licenses wireless technology and designs chips for smartphones. Qualcomm is also the world's largest wireless chip vendor, supplying nearly every premier handset maker with leading-edge processors. Qualcomm reported $8.7 billion in revenue with an EPS of $1.32. QCT, the biggest segment, reported $7.4 billion in revenue with a 26% EBT margin. QTL reported $1.3 billion in revenue with an EBT margin of 66%. Qualcomm expects to report $9.1 to $9.9 billion in revenue for the upcoming quarter and to report an EPS in a range of $2.25 to $2.45. The interesting thing here is that for both segments they expect increasing margins, which is very nice. If we look year over year, things do not look pretty, with revenue down 19% and EBT and EPS down 33%. For both segments it is not looking any good year over year. Especially the EBT margin is down a lot in the biggest segment. And now that we know a little bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Qualcomm is a 136 billion market cap company. PE ratio is at almost 19, which could indicate that they are undervalued right now. Later in this video I will show you my 3 price targets for Qualcomm stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 35.8 billion and in this graph we see that revenue went up in the long run. However, most recently it is coming down big time, which concerns me a bit. The same event is also reflected in the margins. It is going up and down quite a lot and most recently margins are decreasing again. EPS is following the same pattern as the margins and revenue. Nothing really special to add here. Analysts expect that after 2023 the EPS will grow at double-digit numbers, from 10 up to 16%. So to me this looks really good. For the revenue it is a pretty similar story but with lower numbers. It is expected to see 5 to 10% growth per year after 2023. Return on assets is sitting at 14.6%, which is a great number. Return on equity looks quite interesting, but the most important number, return on invested capital, is sitting at 14.5%, which is a great number. But it is lower versus the 5-year average, which is not a good thing here. Current ratio is at 2.33, which is looking pretty good. There is nothing really special to mention here. Right now Qualcomm has 16 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash position. Qualcomm has roughly 11 billion in total cash, so they can't pay down a big chunk of their total debt. This is something that I really like. But it is still very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up, but not really steady and consistent. Shares outstanding are decreasing, which is something that I really like. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 2.67%, which is a great number. Annual payout is at $3.2 and payout ratio is at 37%. I prefer 50% or lower, so right now they have 63% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 5%, which is a decent number, and they have 19 consecutive years of dividend increases. And if you take a look at these numbers, the dividends paid since 2012, you see that Qualcomm did increase the dividends at a decent rate, but nothing really too spectacular here. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that ever since 2021, payout ratio is looking really healthy. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth numbers, which is very nice. Overall, these dividends look pretty good to me, but how about the historical returns? I decided to compare Qualcomm stock with the overall market, in this case the S&P 500. Next to that I added Texas Instruments and Intel. On the 5-year chart we see that Qualcomm did beat the S&P 500 big time. In total, Qualcomm returned 136% including dividends, versus the S&P 500 sitting at 71%. Both other stocks have a lower return versus Qualcomm. On the 1-year chart, things look pretty different with Qualcomm sitting at 9.5% return, while the S&P 500 is sitting at 16%. And of course we see that Intel is recovering a lot with 36% return. On the 6-month chart it is looking pretty different again, with Qualcomm having the highest return together with Intel. On the 1-month chart it is again Qualcomm having the highest return, while the others are seeing a significantly lower number here. Bottom line, Qualcomm beats the S&P 500 long term and short term. So could this be the perfect time to buy Qualcomm stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 1, 3 and 5% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 20, 22 and 24%. And for the free cash flow margin I'm putting in slightly higher numbers. For the PE ratio and the price of free cash flow I'm putting in 17, 18 and 19. My desired annual return is 12.5% since I can get an easy 10% average annual return with owning an ETF. Right now Qualcomm stock is at $121. I hit analyze and we only see a few green numbers. We have a low price target of $71 to $78. We have a mid-price target of $93 to $102 and we have a high price target of $122 to $132. To me, the mid to high price target is the most justified here, indicating that this stock is kinda in the middle of this range. My final conclusion on this stock is that I love Qualcomm. Up until most recently I was an owner of the stock, but it did turn out not to be a great investment for me so far. I did the math and it turned out I could go for better deals somewhere else. Again, this was for me the case. It might be very different for you. So this is not me telling you you should sell. Most fundamentals look pretty decent and I like the fact that they have plenty of cash versus their debt. Dividends are looking really good as well with a great track record. But I would love to see higher growth numbers, to be honest. Valuation is where I'm thinking the problem is right now. It is a great company, don't get me wrong, but I loved it at $100 and now with the current increase it feels a little bit at the high side to me. But remember to always do your own research and never fully trust on what I or other YouTubers say about the stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.